Hello, this is Ian Gordon and I'm talking about the long wave cycle, and this is the third segment which I want to address at this time. As I told you previously, the long wave is based on Kondratyev's work and his thesis which he formulated in the mid-1920s. What I'm most proud of is that I've been able, and other people have done this but not to the extent that I've done this, to bring the cycle, the Kondratyev cycle, to the present day. And as a result of that, I've been able to anticipate with some fair degree of accuracy how the cycle will unfold and what the future ramifications of that might be. And so we just talked in the previous segment about how we recognize that we're going into this big bull market in stocks, and it also runs concurrent with a big bull market in real estate and in bonds, and it's the most speculative time in the cycle. I talked about the cycle being a lifetime cycle, so this big bull market will only effectively occur once in your lifetime. And we talked about how to recognize that we were going into this big bull market, and that was a peak in interest rates, a peak in prices, a bear market in stocks, the 2021 bear market, the 81-82 bear market, and a big recession. And as I said, the 81-82 recession at the time was called the worst recession since the Great Depression. So those four indicators tell us that we're going into this massive bull market in stocks. And each of these great big bull markets, and as I say, they always occur in the autumn of the cycle, each of these big bull markets is always wrapped around an investment theme. So, and that's the sort of the speculation that occurs around that particular theme. So in this first big bull market, the theme was the opening up of the Midwest of the United States, road building, real estate, the expansion of real estate into that area of the United States, and in particular the building of canals. So there was a massive building of canals, and there was a lot of money borrowed to build those canals. In the second big bull market, the speculative theme was wrapped around railway building, so that there were massive amounts of money sunk into different railroads that were built. There were two competing railroads built between Boston and New York, and they were only 10 miles apart. So a lot of money was poured into the railroads. And then in the third cycle here, the speculation is around the industrialization of the United States. So it centers on things like automobiles, General Motors and Ford, and around refrigeration, around radio. RCA was a big speculative stock in the 20s, and around aircraft. Wright Aircraft was again a big speculative stock in the 20s. And of course in the fourth cycle here, the big autumn bull market, the big speculation centered on the high-tech stocks, so that and particularly near the end we had that massive speculation principally in the NASDAQ stock index, where the speculation centered on the dot-coms. And when this big bull market ends, it always tells us that we're going into winter. That is the indication that we're going into the winter period of the cycle, which is the deflationary depression stage of the cycle. So in 1929, the big bull market peaked in early September 1929, with the Dow at 381. It had risen from 66 points here to 381 points here, and it was called the Roaring Twenties bull market. But when that bull market peaked, and then you had the crash in October 1929, it was the indication that you were going into the deflationary depression stage of the cycle. Similarly, when this big bull market peaked here in 2000, when the speculative NASDAQ peaked in March of 2000, and the Dow peaked at 11,750 in January 2000, that was an indication that we were going into the winter, the deflationary depression stage of the cycle, when debt was wrung out of the economy. It has to be wrung out of the economy. And obviously that process is ongoing right as we speak.